particular strategy, we make use of two types of PUIs.
Yes, I
Sang, sorry guys. Okay, so I said in this particular strategy, right, we make use of two types of PUIs in the market. And the first one is breaker block, the second one is order block. So in trading this strategy, our POIs, which is our point of interest or entry point, is either going to be a breaker block or an order block. And you need to know which one to use, right? And I'm going to teach you guys how to know the particular POI that you should use. Now, um, I'm going to give, first of all, before you pick a POI, which is a point of interest, there are rules or there are criterias that you need to see in the market in order for you to know if you are picking the right or correct POI, which is your entry. Now, there are four rules that I use before I pick any POI, be it an order block or a breaker block. There are four rules that I pay attention to, or there are four criteria I must see in the market before I can pick a particular POI, either a breaker block or an order block, as my POI or as my entry point, right? The first rule is that the there has to be a market structure shift or a multiple break of structure, right? Now, before I pick any POI for my entry, I need to make sure that there is a market structure shift or a multiple break of structure. So I don't just rush, or you don't just jump into any, just see, okay, you just see an order block or you see a breaker block and you just enter, and no. You need to first of all see that there is a market structure shift or there is a multiple break of structure on the market. For example, let's go to Euro USD, for example. So that's the first rule, right? There has to be a market structure shift or a multiple break of structure. Please write this down to help you. So now let's go to Euro USD, for example. In Euro USD, right? The market was on a downtrend here. Market was on a downtrend here, right? You can see the trend on the 4-hour time frame. You can see your low, your lower low, your lower high, 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 your lower low. Then this last low took out this last high. What do we call this concept here? For this last low to take out this last high, which is abnormal for the downtrend. What do we call that?
Market structure shift.
That's a question for you guys.
Market structure shift.
I didn't hear you.
Market structure shift.
Okay, good. So that's a market structure shift, right? Now, this is a market structure shift to the upside, which means that we are now reversing this downtrend, which means we're now going to start taking out buys. Now, before you now start taking out buy, you need to make sure that you're entering at the right point of interest, which is you're entering at the right POI. So the first rule in picking your point of interest, it says that it has to trigger a shift in market structure, which is market structure shift, or a multiple break of structure. So you have to go in with whichever one that the market presents to you. In this case, we have a market structure shift. So that's the first criteria. Now, the second criteria says that it has to have liquidity, which is the inducement type of. Remember, last class I taught you guys about inducement liquidity, which I said is the entry that we
Yes.
use
Entry in
to
the
pick
market.
our point of interest, which all enter the market,
Yes.
right? And I said it is the first valid pullback after a market structure shift or a multiple break of structure. So now you can see this market structure shift here, right? Then after this market structure shift occurred, this is where the candle closed. It closed above the high of that last high, right? And then it gave us a pullback. Can you see? Can you guys see the pullback? It gave us a pullback. That is the second criteria. The second rule says it has to have liquidity or inducement protecting it. So after your market structure shift or multiple break of structure, there needs to be an inducement liquidity. So we have our inducement liquidity, and I taught you guys how to mark your inducement liquidity in the last class. So that's our inducement liquidity. Now, the third rule says it needs to be unmitigated. That means your POI needs to be unmitigated, right? Now, this is your POI right here. So you have two POI in this case. You have a breaker block POI, and we have this POI right here. Like I said earlier, we make use of either a breaker block POI or an order block POI. And from the very start of the class, I showed you guys breaker blocks and order blocks. I make sure I teach that very well. So I believe that you guys can spot out a breaker block, and you can also spot out an order block. So in this market here, right, we have a breaker block here. We have a breaker block here, and we also have an order block here, right? I marked it here. So, and although the breaker block and the other block, they are kind of like inside each other. Now, the third rule, I'm going to repeat the third rule. It said your POI needs to be unmitigated. What that means is that in the process of the market giving you that liquidity, if the liquidity touches your POI, that means it is mitigated. So you cannot use it. So for your POI not to be mitigated, or for your POI to be unmitigated, it means that in the process of the liquidity, the inducement liquidity, it should not touch that POI that you want to use as your entry or as your entry or as your POI. If your inducement liquidity has touched that your POI, be it a breaker block or another block, it is no longer valid as an entry point. So it means that, so this third rule is trying to say that, or it means that your POI needs to be unmitigated, which means that the inducement liquidity should have not tapped into your entry points, your order block or your breaker block entry, right? So in this case, we have this breaker block here that is large, right? And we have an order block here, right? Now, when see our liquidity here after our market structure shift, you can see when the market was making that liquidity, it tapped into our breaker block here, right? But look at our order block. So let me just delete this. So our inducement liquidity tapped into this order block here. But look at our breaker block. Our breaker block, sorry, tapped into this breaker block, and this our other block is not, it was the POI, the inducement did not tap into it. So it means that this our other block is valid as a point of interest. This our breaker block is not valid as a point of interest. Why? Because the inducement liquidity tapped it. Now, let me give an example in a line chart now. Let me give an example, like on using a line, not chart now. Let's say this is your downtrend. and then you have a market structure shift to the upside, and then you have an inducement. Remember, your inducement needs to take out the body closure of that candle that caused the market structure shift or the multiple break of structure. So in this case, this is the candle that caused this market structure shift right here. So this is where your market structure shift occurred. And this is the candle that caused it. So if this is the candle closure, your inducement pullback, this is your inducement pullback after the market structure shift. It needs to take out the body closure of that market structure shift or multiple break of structure for it to be valid or for it to be called a proper inducement liquidity, right? Now let's go back to the rules. How would you pick your entry now? Now that the market has given you a market structure shift, and you know that you're now looking for buys. How do you now look out for your entry points? Now, the first rule says it has to have a market structure shift or the market needs to give you a market structure shift or a multiple break of structure. So here we've confirmed the market structure shift. The second rule, it has to have inducement liquidity, or the market needs to give you an inducement liquidity, right? Now we have our inducement liquidity here. Now the third rule says your POI needs to be unmitigated, which I explained that it means that in the process of your pullback, which is your inducement liquidity, it should not tap into that your POI zone. Now, in this market structure shift that occurred here, remember, we have a POI here, and we have a breaker block POI. This is a breaker block POI, right? And we also have what? An order block POI here. Now, knowing which one to use is going to save you, which is the third rule. The third rule says your POI should be unmitigated. Now, you can see in the process of this pullback, this inducement liquidity pullback here, you can see it tapped into our breaker block here, but our order block is unmitigated, which means the inducement liquidity did not tap it. So this order block is valid as a POI. But if, let's say, the inducement liquidity, let's say it was like this now, and then the pullback occurred, you can see we still have two POIs. We have our breaker block and we also have our order block, right? So it means that this one is also valid because the third rule says your POI should not be mitigated by the inducement, right? The inducement liquidity. So this one is not mitigated. This one is not also mitigated. And you might be wondering, okay, which one would I now choose? That will now lead us to the fourth rule of this rules in picking your proper point of interest. The fourth rule says your POI needs to be the closest to the liquidity, to the inducement liquidity. So it actually means that you should be picking the POI, which is the point of interest that is closest to the liquidity. So what that means is that in a case where you have multiple POIs, maybe your inducements have not tapped into your breaker block or your order block, you should pick the one that is more closer to the liquidity, to the inducement liquidity. And let me explain. You can see, for example, in this case right here, this is where our inducement liquidity is, right? This is where our inducement liquidity is. It did not mitigate this breaker block. It did not also mitigate this other block. And the fourth rule says you should pick the inducement liquidity that's more closer to you should pick the point of interest that's more closer to the inducement liquidity. So it means that if you're to pick your entry from this trade right here, when the market returns, the market is going to react from this breaker block right here because it is the one that is closest to the inducement liquidity that has not been mitigated. So you pick this breaker block as your entry and you target to clear this trend line liquidity. If this breaker block was mitigated, that is when we will pick this other block that is not mitigated as our point of interest. That's what happened here. So after the market structure shift, your inducement liquidity, when the market came back, you can see it cleared that inducement. That's why you should always enter a trade after there's an inducement, because his market is going to take out the inducement. So it cleared the inducement and it came on to this breakup, to this other block here that was not mitigated. That's why the market reacted from here. Although this trade, this POI, I just marked it out here. I did not enter direct because I was looking for the directional bias. I wanted to see if this if this buy POI is going to hold to this place. That's why I later entered from here after I got the confirmation. I'll teach you guys about confirmation, when we get to directional bias, right? So that's the same concept I use here to get this entry. And I think I got that from, I think it was a 15 minutes time frame. Let me see if I can remember. I think it was a 15 minutes time frame. Yes, it was a 15 minutes time frame. So on the 15 minutes time frame, there was a market structure shift. Like I said, I was trying to get the bias of that market, but I still use the same concept and I still apply the rules for picking a point of interest for this same trade. So you can see the market was on a downtrend. And when it got to that zone that I was expecting to buy from, it gave me a market structure shift. Can you see? This was the last low, the last high. It gave us, if you can look properly, it gave us a low here and it gave us a high here. It also gave us a low here and it took out that high, that last high, and caused a market structure shift to the upside. And then you can see the inducement liquidity here. After the market structure shift, you can see this small pullback and it went to take out that candle closure of the market structure shift. Now, when after that occurred, you can see I still applied the rules of picking a point of proper a rules in picking a proper point of interest. There was a market structure shift, there was an inducement, and then the third rule says your POI should not be mitigated. So it means that the inducement should not tap into your POI, the POI that you're looking to enter from. And in this case, I just have only one POI, which is this other block here. And you can see the inducement did not tap into my POI. So that is why I marked this other block here as my point of interest. And you can see it finally came and what? It triggered here. Can you see when it triggered? I think I even dropped the trade for you guys, Seth, and people that took the trade to make money. And then I targeted this trend line liquidity here. Although I was even more bullish than that, but this was the nearest trend line liquidity. That's why I took my first TP from here. My overall TP was this one here, which is from the 4-hour time frame. Although I was still looking for a re-entry on GBP USD on Euro USD from here, although it has not triggered yet. All right, it has not triggered yet. But how did I even get that entry? It was actually from here. Here. On this you can see this. If you go to let's lose 45 minutes for this is a continuation entry because Euro USD is currently bullish. So there was a break of structure here. There's a single break of structure here. There's a multiple break of structure here. So like I said, for continuations, we make use of multiple break of structure, right? So after this multiple break of structure here, you can see this inducement here. And if you see apply the rules, this this breaker block here has been mitigated. If this breaker block was not mitigated, I would have picked here as my entry point. But the breaker block has been mitigated by the inducement here. So I cannot pick here. Rather, I pick this other block here that has not been mitigated. So that is why I'm still waiting for this trade, although even though this was a multiple break of structure. Although let's wait for market to come, sure. Market is too far. Then if we still go to what's this pair, Seth? There's this pair I traded. GBP AUD. Is it GBP AUD? Yeah, I think it's GBP AUD. Okay, yeah. If you still go to GBP AUD or let me use forex.com because I have the trade there. Guys, I hope you are following me. I hope you guys are following me. Drop fire emojis in the chat if you guys are following me. All right, so let's go to GBP AUD now. So on GBP AUD, right? I just hope this trade has picked me in. This one that's this trade that I dropped on the group for us. This one that market spread is crazy. You know when market closes and opens, the spread is always crazy. So this is actually at our entry. Technically, this trade is at our entry, but because of spread, it's like because of spread, this trade might just react from that. This might just keep going from here. It might not tap this exact entry because of spread. If you can look at this this sell zone, I mean this sell option, this sell order, technically this is where our entry point is. But if you want to buy, it has not yet gotten to that price yet because of broker spread, and that's crazy. So first off, how did I pick this trade? First off, if we go to the 4-hour time frame, now what I normally do is before I take any trade, yeah, before I take any trade, I first go to my 4-hour time frame. Why? Because I want to get directional bias. This is not a directional bias class, so I'll focus more on this, what I will just round up here on our directional bias class. But before I take any trade, I go to a 4-hour time frame or a daily time frame, whichever one is clearer, and I get the proper directional bias of the market, right? When I get the directional bias of the market, I can now start trading on a lower time frame. Now, on a 4-hour time frame, let's look at this trend. Let's start from here. You can see lower high, lower low, lower high, lower low, lower high, lower low, lower high, all the way. So what can that tell you? The market is on a downtrend, right? Now, if you even shrink your chart and draw your line, you can see the trends connect and the market is on a downtrend. Now, while the market was on a downtrend, you can see right here, if you look closely, here was your last low, here was your last high, here was your last low, and then the market gave a high, and then the market gave another low, and then this low took out that high. So if you look closely, you're going to observe a market structure shift to the upside. And now, once this market structure shift has occurred to the upside, what does that mean? It is going to come and clear this trend line liquidity here, most likely, right? But before then, I need to make sure I get confirmation. So after this market structure shift, there was what? A pullback. You can see after the market structure shift, there was your pullback inducement liquidity here. And this pullback inducement liquidity here, there's only one POI to enter this trade or to take this trade, which is what? This order block here. That is why I marked out this order block here for a possible reversal to the upside since the market was on a downtrend. Now, you can see the market came here and tapped on this POI. I still applied the 4 rules that I just gave you guys in picking a point of interest. Now, after the market tapped here, I did not just buy because, like I said, it was a 4-hour time frame and I was looking for confirmation. And I said I'll teach you guys that confirmation. Now, if we go to the 15 minutes time frame, that confirmation now occurred on the 15 minutes time frame. And this is the confirmation here. So while the market was approaching to tap this my buy POI to get my directional bias, it also gave me a market structure shift, which is what I use for confirmation, right? It gave me a market structure shift to the upside. This is the last low. This is the last low here. This is the last low that took out this high. So this gave me a market structure shift confirmation to the upside. Are you guys following? So you can see as the market was approaching this my POI, it was coming in a downtrend form. This was the last low, this was the last high, this was the last low, and this last low came and took out this last high here, causing a market structure shift. And then it gave me a pullback, which is my inducement liquidity. Now, after I gave me this my inducement liquidity, I have multiple POIs. I have this breaker block POI here. I also have, let me look at the possible POIs I have. I have this breaker block POI here. I also have this should also be a breaker block POI. I also have another block POI around here. So I have multiple POIs in this trade. There are a lot of POIs to actually take this this trade. But if you pay attention to the fourth rule, it says pick the POI that is closest to the liquidity. And this is our inducement liquidity here. So we have multiple POIs that are valid. We have this breaker block, this breaker block, this breaker block. All of them are valid. Why? Because the inducement liquidity did not tap this breaker block. It did not tap this breaker block. It did not tap this other block here. This looks like an other block. So all of them are valid. But why did I pick this one, this breaker block here? The fourth rule says you should pick the point of interest that's more closest to the inducement liquidity. And if you look at this three, which one is more closer to this inducement liquidity here? It is this one. That is why I picked this as my POI. So you can see it came here, tapped here, and what? Did a massive buy to the upside. So let me delete this. So it did a massive buy to the upside, and it took out the first trend line liquidity, which is this trend line liquidity here. This trend line liquidity here, this particular high. It took it out, right? And even broke past it. But mind you, like I said, personally, I'm going to be looking out for buys on GBP, on Euro US, on GBP AUD rather, until the trend line liquidity has been taken out. So I still got I think I still got a re-entry. So I still got a re-entry around here. I got a re-entry here. This was for a continuation entry, which is multiple break of structure. I think it was here on a 45 minutes time frame. So was it?
Sorry, I
I
want
think
to
it
ask
was.
a question.
Can you hear me?
Yeah, I want to ask a question.
Wait, hold on. I'll give you guys room for question. I think I got this. All right, just ask your question, anyways.
Is breaker block the same with break of structure? Can you
What
also
did you
say
say?
breaker block is break of structure? Can you also say that a breaker block is like a break of structure?
When the market breaks a structure, it will definitely give you a breaker block, because a breaker block is you need to
Okay.
understand the meaning of a breaker block. A breaker block is a failed order block. A breaker block is a failed order block.
And,
So if the
okay.
market gives you
Okay.
a break of structure, it's going to give you a breaker block, definitely. Let me explain that. Now, let's say this is a trending market to the upside now. Now, what you need to know is that an order block is an institutional is an area in the market where there are institutional orders that are placed. So this is an order block that's pushing price to the upside. This is an order block that's pushing price to the downside. This is also an order block that's pushing price to the upside. Now, when price was approaching this recent order block that's supposed to push price to the downside, when it broke past it, it created a break of structure. So you have your break of structure here. Now, because it is also a failed order block, it was an order block that was meant to push price to the downside, but it failed. You have your break of you have your breaker block here, which are going to be the candles of that break of structure. Do you get? So you have your you have your breaker block here. This will still remain your order block because it is still holding, except maybe market comes and then
Take it out.
except market comes and then take out this order block that's supposed to push price up here. Let's say market comes like this and sweep this once existing order block. That's when you now call this a breaker block. Do you understand?
Yes, yes.
Are you sure?
Okay. Yes, 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 I do. I just want to know if they're the same thing. So, no, I get it. Thanks.
So like a breaker block is like the candles that you have when the market gives you a break of structure. Those candles that was meant to hold that, or once meant to hold that zone to reverse price. Those candles is now what will now become your breaker block. So those are the rules that you have in picking a proper point of interest. I think still here after the market gave us this trigger for our buy, it still gave us a multiple break of structure. It broke this zone, it took out this zone, so it took out this zone, it took out this zone. So those are multiple break of structures, right? Which is continuation entry. And now it gave us our pullback. So you can see our pullback here, our liquidity here. That is why I didn't enter from here. Why? Because this liquidity here has already mitigated this breaker block here. So I didn't enter from here because it was already mitigated by this inducement liquidity here. That is why I picked this other breaker block as my entry, because it is more closer to this inducement liquidity and it has also not been mitigated. So you can see market also came here, reacted, and all of that. So that's it. Same thing with this entry here that I am looking out for us to enter for this buy. It's also a breaker block. It's also the same concept. I got it on the 15 minutes time frame. It's also the same concept. All right. You can see there was a market structure shift here. See your last low, your last high, your last low. Took out this high, created a market structure shift here. This is the pullback after the market structure shift. That's your inducement liquidity. It didn't tap into this breaker block. Mind you, you also have an order block entry here, but we're picking this breaker block. Why? Because it is more closer to the liquidity and it has also not been mitigated. So we're hoping to enter from there, although it's very close and technically it has even triggered, but spread has not kicked us in on our broker. So does anybody have any more questions? Does anybody have any more questions? If you have any questions, please ask. So if there are no questions, then that will be all for our POI class. The next class is going to be on directional bias. So on directional bias, we're going to have our next class. So it's going to be a long one, so just get ready. Might take 2 hours or so, because directional bias is very important. And also, we're also going to cover other concepts that we've taught from the beginning. So see you guys on the inside. And when this recording drops, do yourself good to watch it as well. So good night, guys, and
All right.
yeah,
Thank you.
bye.
Yep.